Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com. It's Monday, October 20th. Well, the market continues to trace out this ascending triangle, which I laid out on Friday for everyone. This is my theory. This is what I thought was going to happen. So each day that another day falls in line is very encouraging. So it's even taken on a better look. So each day the market starts to unfold itself. It's starting to look stronger and stronger each day, and the pattern is getting stronger and stronger also. Now, we're not out of the woods until we get the breakout, and I do believe that's going to happen. As long as the bottoms remain in a upward triangle and that the last low does not get violated, we've got a really good shot at breaking out. It may not be for a few more days, but it's starting to look like I think it's going to happen. So in our final segment, we'll take a look at all the major indexes. I'll point out some key areas, and I'll show you what we're looking for. And I'm just very pleased with the way things are starting to shape up, because this has been my theory. So as it unfolds, it's very encouraging. So also some of the individual charts are also starting to reveal themselves, and I thought it was time that we stick our toe back in on the long side of this market. So I've come up with a pick, and it's Dynegy, D-Y-N. I like the pattern, and also I like the fact that another utility was a bid made for it this morning, so it put the whole group in play, so to speak. And I noticed a number of other utilities that also stuck their heads up too. So it's kind of like having the wind behind your back, and it'll help. But the pattern looks pretty decent, and I think we've got a good shot at making some money on that. So in just a moment, I'll show you the chart, and then I'll show you how we're going to turn this idea into money, and then we'll take a look at the all the indexes. So don't go away. I'll be right back. Okay, we're looking at a daily bar chart of DYN, Dynegy. And this is a call on the long side. And we're looking to buy this stock tomorrow. It closed at 363. So anywhere from 363 down to, let's say, 325, 328, 330, on any pullback down into here. Okay? Now, if it runs, let it go, wait for the pullback, and then buy it. Okay, a lot of volume in this stock, 14 million shares, so you can load up with this one if you want. It's a cheap stock with a lot of volume. My target is $6.10. It's this first resistance area. Even though I think in the longer run it's going a lot higher, I think we can get back up to 950. Let me give you a zoom in. I think it's going to wind up going right back to right where it came down from. But in time, it could take months. But for our trade, we're looking at 650. Sell stop, a close below $2.83 would be a close below that level right there. Okay, what do I see? A couple of things. Ascending triangle being formed. Now, each market produces charts that sometimes look a little bit different than the last time. Sometimes you get patterns that are stretched out for a number of days, and it's so obvious as to what the pattern is. And then you have patterns like this where they're kind of squeezed together, but the look is still there. But it didn't take as many days to form the pattern. And that's the kind of patterns we're getting. And there's a lot of charts that look similar to this also. So if you don't like this call, you can find another chart that looks very similar to this. And what you need is the big rally, the pullback that does not come all the way down to the old low, and then something that looks like it's turning the corner. That's the look that we're looking for. Okay, so once we get through this 410 area here, then we'll get to our target at 650. So we've got an ascending triangle. We've also got this bottom here, which is this is our support area right here. This was the breakout pull back, and go. That's what I'm calling this. So let me recap that. This is DYN, Dynergy. It's a call on the long side. And when all said and done, I think we can make ourselves about $2.50 on the first trade. Also, what I forgot to mention is we've got 3 days in a row where we've got 3 higher highs and 3 higher lows in a row. So it definitely, to me, looks like it's turned the corner. So it's breakout, pull back, go. Let's go take a look at the major indexes. What I like about the major indexes is that they're all singing the same song. And you know, if you've been following me for a while, that that's what I like to see. I like the same message being given by all the indexes. And that index is that we are building a ascending triangle. And this is the bottom of it, and this is the top of it. And eventually, as long as we stay within the parameters of this triangle, we will break out through this resistance area. And that's going to be key, because once we're through it, on any pullback, this will then become support. The support right now is sort of like kind of fluid in here, because there's no real pattern, because we haven't gotten through. But as long as we have these rising bottoms and this triangle stays intact, we will get the breakout. But the breakout's going to be key. But it's shaping up. I'm very pleased with the way it's shaping up. Transportation average, singing the same song, same look. Rising bottoms, a flat top. We do some more work in here. As long as these rising bottoms stay intact and don't get violated, I think we've got a great chance of breaking out. And then, like I said, the breakout's going to be key. Because once we get above this resistance area, this will all become support. And we'll have a much easier picture to look at. It'll be a more solid looking picture. Russell 2000 singing the same song, you know, tracing out an ascending triangle look. Let me reiterate though, we're not out of the woods until we get the breakout. I'm quite encouraged that we're going to get the breakout, but until it actually happens, you need to be somewhat on guard. You need to be on guard all the time, but sometimes you need to be more on guard. Okay, SPY, same story. I'm not going to repeat it because we can see it. Like I said earlier, I'm happy that all the indexes are singing the same song. The only one that's a little bit different is the QQQs, but it has a reasonable facsimile of a bullish pattern. It's not the rising triangle, but it's a double bottom in here. You know, and I've always said double bottoms need to look like goalposts where you could kick a football through it, and they need to be symmetrical. They need to match, the lows need to match, and this qualifies. And on top of that, we've got this nice reversal day coming off the old low when we tested the low the other day, closed on the high, and now we're getting rising bottoms. You see it? This bottom is higher than that bottom, and this bottom is higher than that bottom. That's encouraging. It's not a whole lot, but it certainly is encouraging. And this is our breakout price. So once we can get through this on any pullback, this will be our support area. That's why it's key to get through that. Okay, so we'll see what develops tomorrow. Don't be surprised if they pull back a little here and there. I think more work has to be done. There may be one attempt to go through the breakout price, and then another pullback, and maybe then the third time up it might go through. But we'll see how it develops. As of right now, I'm quite pleased with the development of all the major indexes. Okay, so that's my view of the market. Until tomorrow, this is TK.